Hey, welcome everybody. My name is Michael. Come on, I'm Director of Content with T3 Live. I'm here with David Prince to walk me through what is going to be a pretty big night of earnings. We have SMCI, AMD, Amazon, and a whole bunch of other things to talk about. David's always busy inside Inner Circle, calling out trades, giving people ideas, helping people work through their issues. So we want to go through everything and help you understand the market through his eyes. So David, it seems like just as far as bigger picture, people seem a little bit more fearful. There's some attention on, CNN's fear and greed index has come down. How do you view the overall mood out there?
I view us as a bull market till proven otherwise. That did have its first real correction close to, what was it, 7% at max, maybe 6-7%, that provided us a great trading opportunity, perhaps not investment opportunity, but certainly trading, as the Qs traded into 413, the previous highs of December, 2 Fridays ago. Nvidia had a 20% correction. Really, it is the market. And we had a wonderful rally. In the midst of this bull market, we had a correction, we had a rally. And now we have the most important week of earnings with Apple and Amazon and AMD and SMCI reporting in front of FOMC results on Wednesday. And on top of it, Janet Yellen talking about the country's needs in terms of debt, and then throwing the NFP. To me, this is like the most sensible, logical market that we stop here because the pressure is on, because yields remain higher, because the 10-year might be over 5%. And, well, we can't just go higher forevermore. So either we need phenomenal earnings to keep coming through, or we need Jay Powell to basically say, maybe things aren't moving as fast as we had hoped, but he won't say it in these words, but you can still count on 2 rate cuts, and then we could easily go off to the races. But this is the exact spot and logical spot we should be stopping after a wonderful rally off a 7% correction just a week ago.
Okay, interesting, because very few people will ever describe the market as rational or logical or anything like that.
Yeah, I mean, I don't think it is typically, but I think exactly what just happened was so logical it's not even funny. What is not logical to me is that when the Qs bounce 15 points and Nvidia bounces 100 points, that then people get comfortable investing in an environment where the S&P trades at 2021 times earnings and interest rates still remain historically very high. That's not logical. Sorry, but to me, the rest was pretty logical.
Okay. All right. So let's go through, we're going to go through some recent Inner Circle highlights. Then we're going to get into the SMCI, the AMD, Fed, et cetera, et cetera. So the big one last week, or one of the bigger ones, was the Google earnings trade, where you bought into earnings, you bought calls in the open, you trimmed and then held some into the print, and then you boxed them after hours. So why Google? Remember a year ago, people were saying Google is dead because of ChatGPT. So why are you betting on Google in earnings?
Sure. So really, price kind of dictates what I do. And the price of Google and the valuation was such that prior to earnings, it was the cheapest or lowest PE stock in the Mag 7 that has a bona fide monopoly that we all use. And that does have a very powerful, let's say, entrance into AI, although they've made a lot of mistakes. And because of those mistakes, it trades at a reasonable valuation and has really messed up a couple quarters in a row. So when I looked at the valuation risk reward and the fact that the setup was not demanding, meaning we weren't screaming higher into the print, it wasn't trading at 30 times earnings, I simply said, this is the perfect option play because I know what I can risk. So if I put in 10 grand, I'm losing 10 grand. If I put in 5, I'm losing 5 if it doesn't work. But if I'm right, since expectations are not high, these could easily be up 3, 4, 5 times. And I love those types of plays on quality companies, not buying something that's always making new lows for years on it. So based on the price and the valuation, I thought it was a no-brainer to at least gamble, excuse the expression, but it is to some degree, make a logical gamble on it. And then I saw the perfect setup. Off Meta's numbers, Google opened down horrifically, down 5 or 6 the day after. And I thought, what a great time to enter this trade. So we bought Google. Options went up. I don't know. Honestly can't remember anymore, but they went up 40, 50%. I said, what a great time to take some money off the table, risk some of the house money, and let's still risk some into the print. obviously worked out. They were better than expectations. Strong guide, not unbelievable. I wouldn't say like pound the table. Google was blockbuster, but really solid. And of course, a dividend and a buyback. And these are sort of the things that make a stock work these days. It was all right, and it wasn't built into the stock. And those are the setups I adore, rather than Microsoft, which I said should have a great number, but it's priced to have a great number. And I think option buyers and sellers will lose all their money because, option buyers will lose all their money. I think it's a seller's print, and the sellers won. So it's really, what are the expectations into the print? Google was the right setup.
Okay, now interesting. Now you brought up Meta.
Listening, I'm letting the dog in. Continue.
Okay, the David's dog is becoming a regular part of the show.
There's about 4 or 5 of them. Continue.
Okay, make sure the horse stays outside. Okay, so another interesting call you had was after Meta reported, and Meta said they were spending tons and tons of money on AI, and you could see this tweet from David. This is the night of the 24th, right after Meta reported, talking about Nvidia. Yes, under 780, I'm long, my friend. So, what exactly did you hear from Meta that said Nvidia is the one to bet on here?
Sure. Just to bring you backwards for a moment, Meta talked about spending, talked about a fairly aggressive amount of spending, and the market panicked. And Meta, we saw, was down huge at one point. What was it? 14, 15%, and well over 50 points. And it took the entire market down. And it was all about spending, not about a slowdown, but really about spending and the fact that it might, have to lower guidance going forward when it comes to the bottom line. Now, the spending is going to be on chips and build out, right? Especially AI, especially probably Nvidia. Nvidia promptly goes down 20 points. And I say, okay, so the market's lower. I wouldn't short into this down move. What can possibly go higher? Gee, right? Let me not be too smart here. So they're going to spend money on Nvidia chips, on a build out for AI, and the stock's down 20. Some people might think it should be higher. What a great entry. And it really was as simple as that. Nvidia is the benefactor of Meta's negative news. And it meant that not only was it well off highs and provided a decent opportunity pulling back 200 points from recent highs. I mean, 780 is almost exactly 200 points. It also told me that there was a fundamental reason underneath for it to bounce. So I was more than happy buying it there. And I think by the open, it already bounced 10 or 15 points. But it was kind of a no-brainer setup that you had to take if you enjoy risk-taking, because you were buying best in breed on what was positive news for them and negative news for someone else. So to me, it was, okay, I got to take my shot.
Okay, we had another big one last Thursday where, David, you got long Snap, which is perennial widowmaker.
Loser of all losers.
Yeah, this stock has cut off more people's heads than I don't know what, and it's extending today after that big gap. So why Snap and why now?
So this one, I like to walk you to backwards what happened. A week ago before Snap, I said, oh my God, we're going over Meta and Google. But let me not forget Snap, guys. They're probably going to miss like they always do, and it'll be disaster. But one of these quarters, they're going to finally pull through and actually have a decent number and talk about a change in profitability and MAUs going up and things like that, right? And when they do, you'll probably see it up 20 or 30%, and it's going to go up 50 or 60%. And as I'm not a Momo guy, and when you see me buying it up 30, 40%, it's because I think it's going much higher because it's the beginning of a big turn. So let me preface this so in case it comes out. Sure enough, it came out. It was a big number. It was a big guy, and everyone was shocked, and it wasn't priced to do so. And in the 13s, we started getting involved. It went all the way to 15 something, and I trimmed a lot. And then I basically made it a core swing trade every time it got to between 1380 and 14. Because if you go back and look at a lot of the way these small cap names trade, they need a pivot, an event to really change the street's perception. Affirm went through it at single digits. Upstart went through it even when it recently bounced, what was it, 6 months ago from like, I don't know, 10 to 50, you could certainly go back to Carvana and look at it. They all look the same. One monster powerful candle, especially Carvana, backed up by an earnings report that whether we or the next guy thinks it's deserved or not, they have wonderful follow through, often for months on end. Now, I've been prepared for a year for when this happened. To me, that began after earnings. So I've been a sizable buyer in the 14s. And then today, just funny enough, I keep telling people every time it goes to the high 14s, I trim, low 14s, I buy it. Then today on a week tape, I saw trading stronger in about 1465, 1470. I said, this is my way of being funny. When I'm 90% sure something's going to happen, I call it the day, meaning like a holiday. So at 1465, 1470, it was so strong versus the market. Everything was going lower, including Tesla, the hot stock from yesterday. So today is National Snap Day. And it broke out, it took out, we had that wonderful earnings gap to trade around. So took the top of the earnings gap out, that's 1494, and then continued another 40 cents higher, which on a dinky $14 stock is actually a decent percentage. And we've trimmed some, and I remain pretty aggressively long, and on all dips, I'll be a buyer. And that's the snap trade, the beginning of a bigger move that probably lands around, conservatively, I'm going with 17, but maybe even room to about 18.
Okay, David, on a related note, sort of a random name I'll throw in, do you think Sofi will ever have a day like this? Because it seems like almost the exact situation, except Sofi, it seems like they always beat, go up, and then collapse.
We're going to get all these like retail guys who are going to hate me on this. So, this is going to suck. But I got to say my honest thoughts. So I always look at money management as like a real simplicity. If you only have $100 to spend and you take half of it and put it in a stock like Sofi, and it goes back and forth for 2 years, it's not that you didn't make much money on Sofi. It's the opportunity cost by not buying Nvidia and SMCI and JP Morgan and like 49 other stocks that have gone up 50, 100, 200%. That to me is the core of money management. What's the opportunity cost? And the reason I bring that up is Sofi is such a retail-based stock where people are not running millions of dollars, right? So like I write every 6 months on Twitter, I said, I wish retail was not so uber focused on Sofi because it goes nowhere. It's not bad. It's not good. It's just stuck. And frankly, everyone knows it's not cheap. And most people that really study the company know it's not a great balance sheet. By the way, I'm a big Noto fan and I bought it before and buy it at 6, 7, it runs to 10, but it's really gone nowhere. So I wrote this and wrote, I just wonder why people are so obsessed with this stock. I got vitriol. I got like anger and you don't understand Sofi and I'm a customer and they're phenomenal. I've left JP Morgan. And I said to myself, I really hope these people do well. I want people to do well. So good for them. They really seem positive. But in the back of my head, after 30 years, I thought two things. I thought, if everyone is that positive and owns it already, who the hell's left to buy it? Because it ain't going to be a bunch of hedge funds because it's a $7 stock. And they're so positive. And two, if it's creating such anger, that's never a good sign too. They're not like happy shareholders. So my point here is this stock has to do it needs a full turnaround, like a real profitability to really throw out real cash flow, not gap, and just not be like an average balance sheet story stock, which it is. It's like, hey, it's a disruptor. It's not a disruptor. It hopes to be a disruptor, but the type of capital they're running is not disrupting anything. JP Morgan takes in more money a day than they probably take in a year. So the concept is great. I love the whole theme about not having a footprint and paying all this money and doing everything online. But to really be a disruptor, they have to go after Morgan Stanley and JPM and Wells Fargo and Citigroup. That they have a long way to go. So I just think it's not profitable enough or not powerful enough balance sheet to be there. I think one day it works. And I think there's nothing wrong with owning it. But if you only have a certain amount of capital and you have 20 or 30% allocated to something like this that goes nowhere perennially, it's not what you're not making here, it's what you're not making elsewhere. Now I'm going to have a million people that hate me now. I get it. They want to be a disruptor. I hope they are. They're wonderful to their clients. They pay higher interest rates. I've done my research. I get what everyone's saying. I all hope it comes true and it's a $15 stock and everyone wins, but it hasn't yet.
Okay. That makes me I'm actually a Sofi shareholder, David, so that makes me very, very sad.
but it doesn't mean it won't work eventually. It's just why it's not working now, right?
Yeah.
Everything's right. And people would be like, that's what people said about Nvidia. So if you have a 2-3 year outlook and you do want to own a disruptor, I respect that. It's just going to take some time. And again, nothing wrong with owning it. I certainly wouldn't short it and be long here, but it should be because you have freed up capital and it's a long-term investment. You don't need it to go up tomorrow. That's my theory.
Okay. All right. So let's talk about another, another heartbreaker that sort of turned it around a little bit. So, I'm babbling. Okay. So yesterday you had a very quick put trade on Tesla. Tesla was up huge on that FSD China news. Elon's a genius again. Why did you go with puts yesterday? Like, why did you fade that move?
Sure. I like to do this just because it's so simple. So in the morning, because of my fancy charting, I did this. 184 and 198. I said, those are your levels. If you look, I'm not a fancy chartist. It was 184 and 198. It was real simple. On a momentum move, if we took out a 184 pivot resistance, there was really room all the way to the 50-day up at 198. Now, there are so many people caught short. There's so many people that gave up on it. Big names, the Gary Blacks of the world who are lowering the size of their position. I really thought there's no rush to short this type of move. I don't know if I want to embrace it. I wasn't smart enough to be long over the weekend, I could tell you that. So how do I play this great volatility? And I thought I'd play it by staying away unless it gets so overdone on the upside, in my opinion, short term, that we go into a definable resistance level, which clearly is 198. There was 184, we went through 198. And so I never like to be exact. So 197, I said, time to start. Now, do I want to go out and short 10,000 shares of Tesla up 14% when it looks like a freight train? Probably not. Let me define my risk by short-term puts. So I went out and did the 190 puts, bottom, I think the lowest I bought them was 330, probably mostly around 350, 360. They probably went to about 450, I think, to a high of 520. And it was a great way to get a nice high percentage gain in a short period of time on the pullback. I also wasn't smart enough to hold them until today. I didn't want to deal with the erosion or the risk of it gapping up overnight. So we pulled back about 6 points from that specific 50-day moving average, had a win and took it off, and that was that.
Okay, all right. Let's talk a little bit about a stock that's been more of a fundamental story. So VKTX, Viking Therapeutics, weight loss drugs are a huge story this year with, Lilly today with the big guidance. Novo Nordisk is up huge. Now, Inner Circle, this has been sort of a signature name this year, is VKTX. Today, you flattened out on the stock after it went up quite a bit. You moved to calls. Mm-hmm. What is your thinking with this name?
So my thinking is, to some degree, biotech is a bit pressured up till about a day or two ago, simply because of the path of rates and the way small caps are. But VKTX, as the third or fourth name in the weight loss group, provided too much opportunity in the 60s when I just look at what potentially it can be valued at. A company that can easily be worth tens of billions of dollars that right now has a minute valuation. So we were buyers of the stock in the 60s. I also have some long-term calls. And the play is really simple. Either eventually the path of interest rates gets a little better, and ideally so do biotech stocks, but more importantly, eventually someone in the healthcare space, because there are so many of these big healthcare companies that are just not doing particularly well, like Pfizer, like Merck, like Bristol Myers, that could kind of get better and use some cash flow, that they're going to take this out. This is too big of an industry. It's such a big industry. A lot of people think it's part of why the economy is doing well because there's that much being spent. A buddy of mine I went to college with wrote about the fact that Botox is about to have a resurgence like it's never had. Yesterday, it was in page 6 the other day. My buddy Paul Frank is like, Botox is about to skyrocket because everyone has, he coined it, what's called Ozempic face. I mean, that's how big this thing is, that it's not just going to be about the weight loss drug. Now it's going to be about fixing your face because everyone like that afterwards, right? So VKTX has meat on the bone. It's still a very cheap company, whether it's a partnership or a takeout. I think it happens, and I think it's north of 100. So we bought stock in the 60s. I made about 7-8 points today. And rather than worry about the Fed and what's going on short term, I then said, time to take profits, buy some longer term calls, June, because I do think it's taken out. It's not taken out by June, because it probably won't be, because my life is not lucky like that. I'm one of those that has to work. I don't run into luck. I'll probably buy some new calls further out, but I don't think it's a standalone company eventually. So VKTX on weakness has always been a buy. Our first big buy was after the broken secondary. We were very aggressive buyers under 80 and sold a lot right into that move into 100. And we continue to be long into weakness and sell when it rips, but I will not get flat this stock unless it's taken out or it goes to 150 type of deal. And that's VKTX. Yeah, and by the way, it's obviously being aided by Lily's amazing guide this morning. So, it's riding the powerful earnings from Lily.
Yeah, I'll just add, if we put on our Peter Lynch hats, I'm hearing anecdotally from people out there that they're going to the doctor and they have weight issues. And there are doctors suggesting Ozempic and other weight loss drugs before they say you need to go to the gym and stop eating Wendy's. It is crazy out there. Okay.
I'm touching and feeling it, like with people on my chat, with dear friends that have lost 50 pounds and look like new people, like truly new people that would walk and, be that are now feeling good and like alive. So it's wild when you see a guy, for 10 years lose 60 pounds and look like a new person and actually be healthier. So yeah, this isn't going away anytime soon.
Okay, right. So let's get into some of our earnings friends tonight. So SMCI, big story. So everybody expected them to raise guidance, which is their custom. It's up 200. It's still up even off the highs. It's up 216% year to date. It's the number one stock in the SPX this year. Do you think they pulled?
I'm going to cut to the chase. I literally have no gut on this. My gut was the stock was going to move higher in anticipation of a pre-announcement because they pre-announce every quarter. The stock then went up 100, and I told everyone, now that it's gone up, if they don't pre-announce or they don't pre-announce good enough, there's a lot of risk, so I would take profits. And of course, they basically pre-announce an earnings date without a pre-announcement, and the stock gets crushed. We have now done a full round trip and made that all up, right? And we're into some resistance. And now trading at a valuation that is not kind of like dirt cheap like an Nvidia versus its growth rate, it's really an even risk reward trade. I do suggest there is a really high likelihood, given that it's illiquid, given how high the stock is, given that institutions would find it more friendly if it didn't have a 2-point spread, that there is a really high likelihood that they split the stock this evening. But are the earnings going to be good enough? I keep saying I literally have no inkling if they'll be good enough, so I'm not playing it. But I certainly will play it after the print, and it will have a huge effect on how Nvidia trades, and AMD, and Broadcom, and Micron, and Dell, et cetera, because what happened 2 Fridays ago tells us they are very tied into each other right now. So I'll be watching this report closely as it affects many other names, but I will not play SMCI.
Okay, we have to get David out of here soon, but we need to get 2 more pieces of information out of him. So Amazon, another one tonight. It's up. It's pulled back about 5%. Actually, it's rebounded since then. What do you think of Amazon going in tonight?
Classic play, provided the right price at the right time, so we are involved. So on a recent pullback during that correction, like I said, I wasn't uber bullish, but I thought it was time to buy 2 Fridays ago. So we were buying certain things like Amazon calls. We were buying certain things like the Qs and Nvidia, best in breed names where I believe that they had an edge into earnings. Sure enough, Amazon has powered higher and is now not quite, but almost got back to new highs. Yesterday, it hit 183. We had 180 calls. They went up about 100%. I took profits. I moved to the 190s. when it pulled back to 180. Here are my thoughts. Fundamentally, the wind is at their back. I think advertising is a home run business. I'm not saying it because Kramer says it. I've been talking about this since the stock was 130 or 140, that this advertised business is a bona fide home run and should get more respect. On top of it, I think retail is holding up strong. On top of it, they are serious about keeping their costs down as opposed to where they were before. In fact, if you go to try and buy certain things off Amazon to get it in 2 days now, even if you're a Prime member, you have to pay extra fees to do it, right? They're constantly thinking of ways to keep costs down and add additional fees. So I do think Jassy is really focused on not bloating the company. As we know, they sold planes and closed warehouses. And then more important than anything else, the profit driver, AWS. Microsoft told us cloud is still strong, right? So I expect a solid number. That said, the stock is no longer an easy play. Now it's higher expectations into the print. So I'm playing with my profits house money. I certainly wouldn't sell my calls, but given the stock has now performed extremely well and made a new all-time high and a high on the year just recently, it failed up there at 188, 189. It's not dirt cheap anymore. But in terms of cash flow, they're throwing off record cash flow, wins at their back. I see no reason to give up on it now. I just can't say it's easier like Google's been or some of my other plays where I'm like, no one's expecting anything. Yeah, they have to put up solid numbers. Expectations are a bit higher here. Not Microsoft-like, but higher.
Okay. Okay. All right. So in just a second, guys, I'm going to tell you a really interesting way you can work with David in the future. But so, David, final question we have, because we have to get you out of here. AMD, what are you thinking here?
That's like the antithesis, right, of AMD. Here's a stock that top of Amazon, that top first, and really kind of signaled AI trade was a little overheated and was going to correct. 227 rolled over and literally went all the way to 145 in a few weeks, like a 30% move down or a bit more. So I looked at that a week or two ago and I thought, we've already lowered guidance. Lisa Su lowered overall guidance for this coming quarter. But while doing so, she raised guidance on the M1300 chip, the AI chip, data center stuff, by over $1 billion or more than 50%. So there's momentum where it has to be, right? The key to AMD and the profitability is all about data center and AI. So I'm like, that's right. Expectations are low. Stocks corrected 30%. Oh, this reminds me of Google. Is it cheap? No, like Google, but it certainly corrected enough. Risk reward adds up. Recently at 156 on a pullback. We bought calls for 167.50s this week. Stock was down. Got lucky. Stock then reversed about 6 points. Those calls went up 40, 50%. I have trimmed. I'm now again playing with house money. The setup is such the stock is not expecting too much into the print. It is not like I get concerned when people make things complicated. They're like, AMD can't compete with Nvidia. I'm like, bozo, who actually wastes their day thinking about something so asinine? Yes, they're not competing with Nvidia. Who cares? The question is there a number 2 and 3? Is there enough meat on the bone? And clearly there is early on. So I'm not worried that like just with a few people who like think they can't compete with Nvidia. No, they can't. You're right. Gee, like shocker. But can the stock take a piece of that pie and earn plenty of money? Absolutely. It's early on in the game. The question is, are graphic chips and PCs slowing? So is the overall pie strong enough to move the stock? Well, given that the stock just came off 30%, my bet is yes, but now I can play with house money since I bought it when the stock was about 5 points lower. So I think there's good risk reward as opposed to Microsoft, Meta, which were really overheated into the print. I think Meta sets up, AMD sets up a bit more like Google. So I'll be long into the print. I might give some profits away if they disappoint, if they continue, if they, impress and have better than expectations, it'll be a big one. And that's how I'm playing with it.
Okay, thanks, David. Okay, David has to get out of here. He has a lot of stuff to do. If you want, we have a few spots left. So David's hosting a VIP event in the Inner Circle room, May 6th through 10th. There are very few spots for this. You can't sign up online. If you want in, email amber@t3live.com, amber@t3live.com. She has a couple of spots left. If you want one, email her now. David, we're getting you out of here 1 minute early. Thank you for your time. Always.
Thank you, brother.
Thanks,
appreciate
David.
Everyone that joined today. And good luck tonight on earnings.
All right. Thanks, David. Okay, guys, we will be back next week with David, 12 o'clock Eastern time next Tuesday. Again, if you want access to his room, email amber@t3live.com, amber@t3live.com. She has a few spots left for the VIP event. We suggest you sign up. Thank you very much.